Hello guys, you are welcome back to Legend TV, and then today we are going to discuss about mutual funds and then bonds. In my subsequent videos, I'll teach you how to invest in them, but for now, I want you to know what you are really investing in, okay? Where your money is directly going to, and then how to know about mutual funds. When people hear words like mutual funds and bonds, they think investing is complicated, but the truth is many Ghanaians are already investing in these things without even realizing it. Today, I'll explain to you deeply how mutual funds and then bonds are, and using real world examples, simple languages, and then everyday situations anyone can understand perfectly. Now, let's get this understanding before we dive in deeper. Before we go deeper, understand this. You can invest your money or lend it to someone. Either ways, all of them are investing, but one, you are investing it or you are either lending it to someone. Mutual funds are investing your money directly, and then bonds are lending your money to someone so that the person come and pay with interest. Okay, so that's the foundation. What is mutual fund? A mutual fund is when people put their money together and give it to a professional company to manage it for them. Okay, so in this case, you are gathering your money, giving it to someone who has the profession to manage it for you. Now, daily life example. Imagine traders association where everyone contributes money. Instead of each person going to the market directly to buy goods on their own, they give it to an experienced buyer to buy and then sell, right? To buy in bulk and then sell. Now, the pooled money that they've brought together is called the mutual fund, and then the buyer, the experienced buyer, is called the fund manager. So how mutual funds work? You invest your money with a fund management company. They invest the money in stocks, treasury bills, bonds. Profits and losses are being shared among investors. Always remember this, and I've told you that there is risk in every investment that you do. So profits and losses, not only profits, but in this case, there is low risk of encountering losses. That's why profits are being shared among. So your investment grows over time. Now let's talk about real Ghana mutual funds that everybody can invest in, even if you are starting from scratch, like less as one Ghana city. Example one is the IC Liquidity Fund, which is the most popular mutual fund in Ghana that everybody knows. Many invest in treasury bills and short-term government instruments. Risk is very low. Returns are steady, not aggressive. Practical example, if you had invested 1,000 cedis in the IC Liquidity Fund, after some months, your money will grow more than 1,050 cedis. You'll be closely to 1,200 cedis after 1 year. This is good for emergency fund, short-term goals, and then people who hate risk. The second example of mutual fund is the Stanbic Trust Fund. Stanbic Trust Fund is another well-known mutual fund in Ghana. Mix of stocks, bonds, and then treasury bill. It is of medium risk, better growth than pure savings, and this is very true. The most interest that banks pay is, I think, 5%. Over here, you are earning more than 10%, and that's better growth than pure savings. Someone who invested 5,000 years ago will see their money steadily growing without worrying about daily market swings. It is good for long-term savers, people who want balance. The third example is the DataBank mutual funds. DataBank also manages mutual funds that invest in stocks and bonds, more exposure to equities, higher growth potential, more ups and downs. Good for young investors like me, long-term wealth building. Now let's talk about the advantages and then disadvantages of mutual funds, since you've already know what mutual funds are. The first advantage of mutual funds is it is being managed by professionals. You don't have to wake up, go into the market by yourself, selecting the kind of stock to buy, the kind of crypto to invest in. Over here, you just give your money to the company and then it manages your money for you. Diversification without risk. The company diversify your money for you. The second advantage of mutual funds is you can start with small amounts of money, right? The IC Liquidity Fund can go less up to 1 Ghana cedi. You can invest 1 Ghana cedi. And then it is good for beginners because you can see your money growing steadily and other stuff before you get huge amounts of money to invest into the market. Disadvantages of mutual funds. Whilst it has advantages, it also has disadvantages or demerits. And one is management fees. The company or the broker that you are using also take fees. Now that we are done with mutual funds, let's get directly into bonds. What is a bond? A bond means you are lending your money to someone and then you are earning interest. You are not owning a business, you are just acting like a bank that gives loan to people. Daily life example is if you lend your money to someone reliable and trusted, they promise to pay you back with interest, and that's a bond.